going into the GFC. In my portfolio, we had an office building in Southern California. The property was about 83% occupied. My asset manager said, hey, look, I think if we can get it to 90, we should sell it. And at that point in time, we'd already made $40 million. It appreciated $40 million on a $60 million investment. So we made a very, very good investment, earning a profit on that.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestoriinsurance.com/fuel.
Hey, everybody. Welcome to the Real Estate Pros podcast. I'm your host, Michelle Kesil, and today I'm joined by someone I'm looking forward to chatting with, Brian Murdy, who is the principal of BTM Investors in institutional real estate. So really excited to have you here on the show today, Brian.
Thanks, Michelle. I'm looking to be forward to being on it as well, and answering whatever questions you have, and learning, just from your questions as well.
Yeah. Absolutely. I think our listeners are going to take something away from all of your consulting and development expertise. So let's dive in. First off, for those not yet familiar with you and your world, can you share what your main focus is?
Sure. My main focus right now is on asset management intermediary consulting, as well as working on a couple of development opportunities that my partner and I have uncovered in the Eastern U.S. So that's what I've been spending most of my time on. And on the asset management consulting side of it, what's interesting is you're seeing a lot of family office who I've been working with, that they've bought a lot of property over the last several years. They have staffed up, but they've really not created all the policies, all the things needed to actually run it and report it. And now that they're sitting on these assets, how do we handle it? How do we run it? How do we do it efficiently? What's the best course of doing it? So I work with them in setting that up.
Awesome. And is this all across the U.S.?
Yes, yeah, all across the U.S. Yeah, over my career, I've managed properties, all main food groups, the 5 main ones plus a few others across the U.S. And I've had clients both domestically and internationally.
So what got you started in this business?
Happenstance. Started out as a CPA, and the first clients I had were real estate and banking clients that focus on real estate. And as the S&L crisis hit and you had all the problems, next thing you know, at age 26, I joined an insurance company as an accountant. And within 9 months, I was running the syndication area of that company as a 26-year-old. Didn't really know what I was doing, but no one else was there above me. So it was either, take over the reins and learn as I go, or let it flounder.
Yeah. Wow. Exciting. And so what got you into the world of multifamily and development today?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Well, I think for multifamily, it's been a primary core of what I've worked on for pretty much my whole career. One of the interesting parts when I first started out, it was a no heads in bed strategy with respect to institutional investors. If there was a head in the bed, they didn't consider the real estate institutional, meaning apartments and hotels. And when you really look at it over the last 40 years, you look at the analysis from the returns and risk-adjusted returns. Multifamily's only had the highest simple returns, but it's had the highest risk-adjusted returns because there's less volatility in there. Yes, every individual lease isn't a credit lease, of course, because you're leasing to an individual. But if you have 250 individual leases in a property, that's actually more creditworthy than leasing to one or two major tenants in office product. And that has proven out over the last 30, 40 years in the returns.
Yeah, absolutely. So, what are some of the main keys that you would say have allowed your business to be able to scale and to run smoothly?
I think some of the main keys is just having a lot of industry contacts over the last two, 3 decades, and always treating people fairly and being straight up on it. I think one of the biggest things that many people are afraid to do is report bad news. And I learned that early in my career when I was at a board meeting for a major pension plan. And I just taken over a portfolio, and one of the properties, we just made a bad call. I mean, we thought it was going to go A and it went B, and next thing you know, we're sitting at 83% occupancy. And I just told the board, I said, we messed up. I said, we thought I was going to do this. It didn't. Here's how we're fixing it. And I had 2 of the board members come up to me after and say, thank you for being honest. We all know everyone makes mistakes, and you're the first advisor to admit that they made a mistake. And I learned a lot from that it's okay as long as you have a plan to correct those mistakes, because real estate's not perfect. You're not buying bonds and stocks that you just you manage and look at the companies. Here, every property is very unique in its location and its design. So you have to be recognize that there could be unique things that will happen to it that are both positive and negative.
Absolutely. When you say positive and negative, are there like specific examples from your experience that you can share?
Well, sure. Well, the one I just gave, and there was another one going into the GFC. In my portfolio, we had an office building in Southern California. The property was about 83% occupied. My asset manager said, hey, look, I think if we can get it to 90, we should sell it. And at that point in time, we'd already made $40 million. It appreciated $40 million on a $60 million investment. So we made a very, very good investment, earning a profit on that one asset. And I opted not to sell it, even though my gut was saying, just sell the thing into the market now. GFC hit. Next thing you know, the property was worth $60 million again. So all the $40 million was gone, and it took another 3 to 4 years before you got back up to that other level. So we ultimately lost the time value of money over that 4-year period. And I think the lesson learned is to not fall in love with your properties and not realize that everything with that property is perfect, and that is the next thing to sliced bread. And so if you can step back when you're managing a property and look at it as if you're buying it for the first time every time, not as though it's been in your portfolio for 5 years, and just look at it, you're buying it for the first time. Would you want to own it today? What are the factors that will drive you to buy it again today? And that's important to look at every time.
Yeah, absolutely. When it comes to development and new construction, what does that look like for you in your business?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Well, right now I'm working on 2 different development opportunities. One where I've been advising a family office on what to do with vacant land they have. It's waterfront land, well located. and how to handle it. So we've been working through the process, coming up with a feasibility report on the best use of the plan, and that phase has gone through, and now we're out marketing the property with potential developers to get different perspectives on what they would view for developing on that site. The other one is a very unique location. I would call as Class A location as you're going to get, and it has a lot of factors in it that make it problematic for groups because there's multiple players involved. There's affordable housing requirements put in by that city, and some people are just not willing to get over that hump. But when you look at all the location and the ultimate opportunity for it, even at today's rents with no increase in rents, you're looking at north of a 20% return to the investor base, which is a strong return for multifamily development at this point.
Yeah, definitely. That is a strong return. Awesome. What are you most focused on solving or scaling to next in your business?
Well, I think the most thing you're looking at is continuing to broaden your client base. And I think, as I mentioned to you earlier in our prep, was that one of the things I'd love to do is expand more into more more high net worth environment, high net worth world. My role has always been in the institutional, the pension plans, the endowments, foundation world, and a lot of the money is now coming up through high net worth. You look at all the Microsoft millionaires in Seattle or the Google millionaires in the Bay Area, and these folks have investments, and they have portfolios that are tens of millions of dollars that they're now expanding on and tapping into that market to help them understand how to manage their properties, how to manage the back office for that. They may be sometimes great at picking the properties, but once you own it and managing it, and how do you handle reporting to their investors? How do you go through all that? And that's something that is needed, and I'd love to focus more on going forward and tap into that market.
Yeah, definitely. So, does that look like collaborating with other investors on projects?
Yeah, I think some collaborating. The one development I'm working on, and both of those developments actually, I'm collaborating with another firm, someone I know very well and trust, and so that firm and I are working together, and we bring different aspects to it. And I think it involves me going to some more conferences along those ways. I think the folks there are slow to trust, and that's good. So it takes time for them to gain for you to gain their trust, and for you to, be able to get into their confidence, so that you can start helping them and trust you with their with management consulting assignments.
Yeah, absolutely. What does it look like for you to connect with these potential clients? Is that through networking or other types of strategies?
It's a combination of all, from networking, from talking to my existing networks, as well as I mentioned, going to different conferences and expanding my networking, to doing, posts on LinkedIn that I've done, and just continue to do that. And as I get one client, ask them to, hey, if they're high net worth, they have 4 other people they know. Can you recommend to them, and just network that way too? I think that's the best endorsement you can get, is from an existing client that's very happy with your work product.
Yeah, that's important. Those relationships are everything in this space.
They really are, and as I've said, they're easy to lose but difficult to gain. And
Hmm.
so the most important thing is to always be straight up with your clients, and work with them. And what I've always managed in my career is the model of no surprises. You don't want to surprise them, even with good news, and say, hey, yeah, guess what? We sold that property for 10 million more. Well, if I'd known that, I would have planned for this, this, and this, the client might say. So you
Right.
want to be able to give them good news and bad news at even pace, so that they understand it all, and they're aware of where everything is in its life cycle.
Yeah, that's definitely important. What are some of the common trends that you're noticing when you're consulting and, yeah, helping people?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I think some of the common trends are with respect to smaller groups that are non-institutional is the lack of having a wholesale analysis, a true wholesale analysis, where you look at how the property fits, not just within by itself. And I think that's a common fallacy that most people do. They'll do a wholesale, say, hey, look, this property still can generate another 10% return over the next couple of years. We should hold it. But if the rest of the portfolio is generating a 12 or 13% return, maybe you want to cut bait on that one and go invest in another product. And that's one of the things that a lot of folks don't do is they don't look at as an investment as part of a portfolio. And you have to see how it fits within your portfolio, how it fits within your strategy. I had a portfolio manager work for me one time, and it was $1 billion portfolio. It was a small property in there, smallest property, and it had a $5 million prepayment penalty. And my PM said, we can't sell it, the prepayment penalty. It's just too much. And I told him on the numbers, as if we sold the property and took the entire hit now and never reinvested. And he came back and he said, in 5 years, we had 20 basis points higher return. I said, now run it as if we invested at an average property. And he did that. Now we have a 50 basis point return. This is because the problem was you were looking at that one asset, that debt associated with the asset. That's not associated with the asset. It's tied to that asset, but that debt is portfolio debt that we assign to the asset. And I think you have to always look at that. You can't always just be so tied down on a product and a property as if that's the only thing going on with it. It's part of an overall portfolio and overall strategy.
Yeah, definitely. That's something important to note. So when you're doing consulting work, is there a specific type of client that you're typically serving?
It's different. I've worked for institutional clients. I've worked for a lot of intermediaries, where brokers and mortgage bankers helping them with their management and their businesses. Brokers I found are obviously very intelligent folks, but they're not always the best business people and best organized, and they end up spending a lot of time doing things they don't need to do. So if I go in there and help them realign their team and relook at it to free up time for the lead brokers to do what they do best, which is get new clients in and sell product, that's what I focus on, and to take time off their hands that is managing the back office. And so I work with them on that, be a little more efficient. I've worked with groups in helping set up research functions, capital market research that they didn't have. Another group I've worked with this, as I mentioned, on asset management. They looked at their portfolio and they had a massive portfolio, but they really were not evaluating it and managing it as according to what it deserved, the attention it needed. They were very thinly staffed, and so I came up with a plan for them to implement and utilize and grow in their exercise for that plan now.
Yeah, absolutely. A lot of the listeners are investors that are maybe earlier on in their journey. What would you suggest for them?
I think if they're early on in their journey and they're investors, work with someone that has had a few turns in the cycle, meaning that they bought property, managed the property, sold it, and done that several times. And you can see proof is in the pudding that they're successful at what they do. To get in with someone who's in their first transaction or the first one, it's hit or miss. You may be great, the property may be phenomenal, then you're excited you got a great one with them, then the next two or three are not. It's always important to look at the track record and ask for that track record of information to understand how they do things. And don't be afraid to ask questions. I think a lot of, even though you've made a lot of money, you have a lot, some folks are intimidated by the experts in it, the other side of it. And it's your money. Don't be afraid to ask questions, even if you think it may not be a silly question. No question truly is silly, because if it's important to you, it should be important to them, and they should address it. And so don't be afraid to ask questions that you need an answer to, that you don't feel comfortable about. And ultimately, if you don't feel comfortable, don't be pressured into it. There's so many more products out there, so many more properties out there. Go to the next one and take your time. I had a we were meeting with a major state pension plan one time, and she asked that and said, your investment committee, she said, it has a one veto rejection. One of the 13 people on the investment committee veto a transaction, the transaction fails. And she goes, well, how do you do that? How do you buy properties? She says, you're vetoing it. And she said, well, our answer back to her was that there's a lot of other properties out there. If obviously someone felt that strongly to veto it, it's probably one that we all shouldn't buy. And we go on to the next one.
Yeah, absolutely. That's great advice. Awesome. Well, before we wrap up here, if somebody wants to reach out, connect, collaborate, learn more from you, where is the best place that people can find you and reach you?
My website, www.btminvestors.com, has all my contact information. Reach out, as my cell phone on there. You can, my email on there as well. You can fill out the form it has, or just email me directly and reach out to me. My email is very simple. It's Brian at BTM Investors. I kept it very simple for that.
Perfect. Well, I appreciate your time, your story, and your perspective. Thank you for being here.
Thanks, Michelle. Enjoyed chatting with you. Take care.
Of course. And for the listeners tuning into our show, if you got value, make sure you've subscribed. We have more conversations with operators like Brian who are building real businesses, and we'll see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.